This is Akashvani. In the program Spotlight, now we bring you a discussion on Reserve Bank of India, RBI, monetary policy decisions. The participants are A.K. Bhattacharya, economic analyst, and Arjun J. Chaudhary, anchor.
I'm joined by Shri A.K. Bhattacharya, with whom we will discuss about how the RBI policy has been set now by the central bank governor, Shri Shaktikanta Das, and on this we'll discuss in detail what is the impact of the monetary policy both on the banking system and on the customers who avail the banking system. AKB, a warm welcome to you in the program.
Thank you.
Let's begin by understanding what the Monetary Policy Committee, the MPC, has kept the repo rate unchanged at 6.5%. The standing deposit facility rate is at 6.25%, and the bank rate is also unchanged at 6.75%. What does this mean for the economy?
Well, it essentially suggests status quo continues as far as the cost of money is considered at all levels of economic activity. Number two, it suggests that the central bank's monetary policy committee, it is slightly worried about the inflation outlook. It is not very comfortable in going over to the next stage of the policy rate evolution, which is going from a pause in the rate increase cycle to some sort of a reduction. It has postponed any such pivot, as the RBI governor is fond of saying, the next review. Why it has done so? This is because, one, it is slightly worried about the inflation outlook, although its inflation forecast shows a slight decrease from around 5.3 to 5.2% for the current year. Nevertheless, it is worried about three things. The Monetary Policy Committee feels that the El Nino impact on the monsoons are yet to be seen, so that could be a negative surprise for India's food availability and food situation. So therefore, prices may just go a little out of control. Number two, the oil prices may still remain a little northwards, which in other words means that if there is the recent decision by OPEC is to cut the production marginally though, but if Ukraine and Russia war continues, then probably the crude oil price may not stay at the same level as the RBI expects it to be, which is around $85 a barrel. And the third element is that if the economy is impacted because of the global factors and the agricultural output does not improve or it takes a negative hit, then the price situation may not remain under control. So taking a very cautious view and a conservative view, the Monetary Policy Committee has decided to continue to remain in what is called a withdrawal of accommodation stance, which means that continues to keep the repo rate at 6.5% as it was in 2 months ago. For the customers and the retail consumers, this essentially means that especially the home loan borrowers and the car loan borrowers, they may probably be reaching a point where they don't have to worry more about their loan installment liabilities if they are on a floating rate of interest. Interest rates are not going to go up and possible that from next year onwards, Reserve Bank of India's Monetary Policy Committee may even think in terms of reducing the rates. So the long ordeal of seeing the interest installment liability going up may have come to an end. That, having said that, on the macroeconomic front, the Reserve Bank of India is cautiously optimistic and seeing that the current year's growth rate will be 6.5% and inflation will stay below the upper tolerance band of 6%, but still uncomfortably high at 5.2%.
AKB, RBI has projected the CPI inflation for the financial year 24 at 5.1%, or you could say 5.2%. The headline inflation is above the target of 4% and expected to remain so during the rest of the year. Considering this, do you think that we will have to expect further rate changes in future MPC decisions?
I think it all depends on how the inflation trajectory behaves. Remember that you are going to see a Monetary Policy Committee review in August. You will see one more review in October and one more review in December. So there are 3 more reviews waiting to happen in the current calendar year itself. And Reserve Bank of India's Monetary Policy Committee members have taken a very cautious view, saying that let us not take a decision on a rate decline right now, because growth is important, but equally important is to keep a watch on inflation. And since there are some worrying signals of the monsoons, the oil prices, the global situation, and milk prices also are showing upward tendency. So they are taking a very cautious view and saying, let's stay on the pause mode and see how the price behaves and take a call in its August monetary policy review.
The GDP growth rate forecast for the financial year 2024 is retained at 6.5%. You mentioned that earlier as well. Could you explain what are the avenues which the Monetary Policy Committee might have considered before coming to this forecast of 6.5% GDP growth?
Well, the Monetary Policy Committee believes that the services sector will continue to do well in the current financial year. And as you know, services sector accounts for more than 55% of the share in the GDP. If, like last year, the services sector grew by around 11%. So if this year it continues to grow, let us say even at a lower rate of 10%, you would have taken good care of the economy as far as reaching a growth target of 6.5% is concerned. Agriculture, the Rabi crop output, the RBI and Monetary Policy Committee has assessed, is going to be good. So therefore, the first half of the current financial year will see good agricultural growth. But surprise in this pack is that if Kharif output is not that good because of the poor monsoons, agriculture will be adversely impacted. Manufacturing did not do well last year. There are no clear signals whether manufacturing will pick space in the current financial year. But the key issue is whether agriculture fails to maintain the kind of growth that you saw last year, and whether services sector can keep at least a double-digit growth in the current year. Now, which is why the Reserve Bank of India has pegged its growth forecast for the current year at 6.5%, 0.7 percentage points lower than what was achieved last year. So it's a conservative estimate, it's a cautious estimate. It takes note of the inflation challenge lying ahead in the economy, and which is why the rate decline that many people had expected, at least the stock market was expecting an announcement on a cut in the repo rate. That did not happen because RBI is becoming very cautious, which is why it is staying in a stance which is called withdrawing accommodation.
AKB, on a quarterly basis, the GDP growth rate was projected at 8% in the first quarter, 6.5% in the second quarter, 6% in the third quarter, and 5.7% in the fourth quarter of the current financial year. What is your take on this forecast, which shows a descending trend in the overall domestic production?
The descending trend, apart from the first quarter is based on more or less available data based on the high-frequency indicators. In April, May, if you look at the GST numbers, and if you see the e-way bills being generated in GST, till now, you clearly see a GST collection growth of over 12% in the first 3 months. Now, if you manage to retain a 12% growth in the first quarter on GST collections, that's a good sign. If you look at the railway freight, they are doing quite well. If you're looking at the electricity consumption, they are quite doing well. If you look at the air passengers growth, they are also doing well. PMI index, which is a purchasing managers index, they are also well above 56 or 57. Now, as you know, that any number above 50 is a sign of expansion, and any number below 50 is a sign of contraction. So all these high frequency indicators suggest that the first quarter will do well, which is why they are going in for 8% growth for the first quarter. The second quarter onwards is a descending rate because the RBI committee is conscious of the likely impact, a possible impact of bad monsoons, higher crude oil prices, higher food prices, milk supply being affected, and therefore more imports to meet domestic shortages. So which is why every second quarter, third quarter, and the fourth quarter, you are seeing a decline. Also, please remember, these numbers are calculated on the basis of the base numbers that you saw last year, and the base numbers last year are pretty high. So therefore, you see gradual decline in the numbers on the second and the third and the fourth quarters of the current financial year.
AKB, let's discuss about the impact of the policy rates on the common man. We have the unchanged policy rates at 6.5%. What is the impact on the rate of interest which is to be borne by the common people who have to repay various loans?
There is no immediate relief for the home loan borrowers or the car loan borrowers. If you are in a floating rate situation, you are not getting any relief, but you are also a little assured that there is no increase either. And your expectation that it might decline soon will have that expectation has been slightly dashed a bit, in the sense that you have to wait till August, what the RBI Monetary Policy Committee does in August, or if not in August, then in October or in December. A lot of experts believe that there is no rate change possible in the last three monetary policy reviews in the 2023 calendar year. So the earliest you might see is in February. Now remember that there is no full budget next year. Next year is an election year. Monetary Policy Committee will have to take an overall view on what it should do with the repo rates. But a lower repo rate will obviously cheer the people, and therefore Reserve Bank of India will have to keep that in mind.
AKB, the central bank has allowed banks to issue RuPay prepaid foreign exchange cards. What is meant by the RuPay Forex card, and what are its advantages?
I think that a RuPay foreign exchange card means that the loop is within India, in a sense that the Forex cards are issued in India, and all the transactions are monitored by the bank, which is an Indian bank, which is issuing the RuPay card, is monitored by the Indian bank. So the government has been concerned, and so has been the RBI, about the usage of foreign exchange by Indians going abroad without being monitored by the liberalized remittance scheme, which is why you had introduced the 20% tax collection at source for credit card expenditure internationally above 7 lakh a year. Now this scheme, I have a feeling, is aimed at addressing those concerns of Indians who are going out needing those foreign exchange, and they may not want to come under the glare of those tax collected at source of 20%, and they will rather take RuPay Forex card from an Indian bank.
AKB, if you look at the MPC decision today, how will it benefit the MSME borrowers who are in recovery from the impact of the pandemic?
The MSME borrowers are in a better situation right now. The liquidity in the system is good. As RBI Governor announced at the Monetary Policy Review Committee press briefing, that almost half of the 2,000 rupee notes in circulation is almost around 1.8 lakh crore of currency notes in 2,000 rupee note denomination are back in the banking system. And 85% of those 1.8 lakh crore of money has come in the form of deposits in banks. So that money is actually with the banks. They haven't gone back to exchange of notes. So which means the banks are, from a liquidity point of view, a little better off. The only worry is that the interest rates remain elevated at 6.5%. MSMEs, like any other corporate borrowers, would have liked the rates to come down a little, but Reserve Bank of India, in its wisdom, has decided to play safe. So therefore, liquidity-wise, MSMEs should not have any problem. But in terms of cost-wise, yes, the cost of money still remains elevated at 6.5%.
Well, thank you so much, AKB, for being with us on this program and explaining to us in detail the key impact of the Monetary Policy Committee decisions of the central bank to our listeners. Thank you, sir.
Thank you very much.
You were listening to a discussion on Reserve Bank of India RBI monetary policy decisions. The participants were A.K. Bhattacharya, economic analyst, and Arjun J. Chaudhary, anchor. This program was produced and presented by the News Services Division of Akashvani. You can listen to it on our mobile app News on Air. This program is also available on our YouTube channel News on Air Official. You may share your feedback about this program through email at airnsdtalks@gmail.com or WhatsApp on 928-909-4044.